Hi, Brian.
Hey, Meg.
Today is our fishbowl talks.
It's fishbowl day.
So
a fishbowl week.
Fishbowl time. Today's topic is capitalization rate in real estate.
Yeah.
Can you explain what that is to us?
Well, I'm guessing you got that because we've had so many investors call us recently, and we're just interacting with them on so many different things.
We have been getting a lot of investment calls.
Right. And so we're talking to investors, and some of them are seasoned, some of them are novice. And so sometimes you get lost in the lingo a little bit. And one part of that lingo is what we call the capitalization rate, right? Mm-hmm. Otherwise known as the cap rate. And basically the cap rate is designed to be like a really simple way of determining whether or not an investment might be a good investment. And it's not in depth. You still need to do more research beyond the cap rate, but it's a good thing that you can look at right off the bat and just sort of weed out the wheat from the chaff, if you will, right? Mm-hmm. And so basically what the capitalization rate is in essence, it is the gross return on the asset, on the house or whatever. Okay. So the way that you arrive at capitalization rate is relatively easy to understand. And that is you take the gross annual rent and then you divide it by the purchase price. And that equals your capitalization rate. Mm-hmm. As an example, I just did the math. So I'm not a math genius, but I remember this because I just did it very recently. So if you if your purchase price is $100,000, and if your rent is $1,000 per month, right? Mm-hmm. So $1,000 per month times 12 months in a year is $12,000. And then $12,000 divided by $100,000 is 12%, right? Mm-hmm. That's an easy one to understand. Mm-hmm. So your capitalization rate on this $100,000 property is 12%. Okay. That's it. Now, again, the capitalization rate does not take into account expenses. It's just that top line. It's here's what I paid for the price, and here is the gross rent that I would expect to make. So it's just a rough figure that you can look at to determine if it's a reasonable opportunity or not. Okay. And one last thing. I'll shut up after this.
No, you're fine.
So what most investors are looking for is around 10%. Right. Obviously, the higher the better, no doubt.
Right.
But your goal is 10%, and so that's a good thing to keep in mind when you're considering this. However, I will caveat that by saying that if you're going into like a nice residential neighborhood and buying a house, 10% is usually not on the table. It's usually somewhere in like the 5 to 7% range is very common.
I was just going to ask you that because the market right now is still a seller's market and people are paying top prices for homes. If someone was trying to get into a neighborhood that they could use as a rental, they really have to consider that going into a nice neighborhood compared to a place that is more an investor's area. Right. You know, where to choose, pick and choose kind of thing.
Yeah, that's a good point. And that's what it is. And so in single family homes, you're going to get a lower cap rate. If it's more of an investment grade property, mm-hmm. if you will, then it might be you might inch that a little closer to 10. But generally, single families are always going to be lower than multifamilies. Okay. And I don't know if it relates to any other question yet, but not to get ahead, but as an investor or when you're looking at multifamilies, I think as you go away from single families into duplexes, triplexes, quadplexes, and beyond, the more units in the piece of real estate, the more that the value is derived from the income, because it's now more of it transitions from being a home to an investment, and a home, an end user buyer might be willing to pay a premium for that home that transcends the rental income because often they're not buying it for rent; they're buying it to live in it. And so they care about schools, they care about convenience, they care about, all the things that you care about in a home, the mm-hmm. size of the lot, the neighborhood, and who knows, all kinds of stuff. Right. So you're willing to pay a premium for those things that have nothing to do with the income that it might generate. Whereas if you buy a duplex or a triplex or a quadplex, those are all factors that you might consider as well. However, your primary consideration is that cap rate, is that return that you're going to get on that investment. Right. So the income that's derived from that property is much more significant of a factor in the ultimate value of that property. Anyway, I'll shut up on that.
I think you should write a book now.
Because the only reason it's on my mind and we're talking about it and you have the question is because so many, it's just amazing. It's amazing how many investors are not only looking for opportunities, but unloading opportunities as well. So if you are looking for an opportunity, let us know because we're generating a lot of them.
We are.
And if you are an investor that holds properties and you want to take advantage of the greatest market of all time with the highest prices that we've ever seen, call us also because we also have people looking to buy those things.
Right.
So it could be a match made in heaven.
Do we have an update on the mortgage rate today? I thought I saw something say that it changed again today, but I
didn't see it today, Meg, but I think a week or so ago, I said it was like 4.75 or around there. And, I know obviously we're steeped in it, so we see mortgage rates all the time. I remember at the beginning of like 2021, mortgage rates were under 3%.
Yeah. So
you're talking in a year and change, mortgage rates have gone up by, over 50, what is that, 50%, 60%? I don't know. There. I did too much math already, so I'm losing it. It's over mortgage rates are up over 50% in a year and a half, let's say, roughly speaking. I think those are pretty fair numbers to share.
Yeah.
So that's a lot. I mean, sure, on a real basis, it's up from 3 to 4.75, so it's up 1.75%. But in actual amount, it's up a lot. It's up 60% or something, All
right, our last topic today is movies.
Oh.
So they announced today for the summer blast of movies what's coming out. Top Gun 2, finally.
My man Tom Cruise.
Finally.
Yep.
So the premise of this is that Goose's son has joined the Naval Academy and is a pilot kind of thing, and he's gone to Top Gun and he wants to be a pilot, and he's going to meet
Maverick.
He's going to meet the Mav. Yeah, so
I don't want to spoil it, but is Maverick like a teacher at the school?
I believe he's coming in as an instructor of sorts.
Oh goodness.
Yes. So you have to watch the trailer if you haven't seen it yet.
Yeah, Meg posted it to my Facebook, so if you want to see it, go to my Facebook, and it's on there. I haven't watched it yet.
Who was your favorite character in Top Gun itself? Just Tom? I mean, did you have a certain scene that you truly liked?
I mean, listen, of course, the interaction between Maverick and Iceman, right, which was played by Val Kilmer, I believe. Yeah. That was awesome. That was epic, right? Their little battle, their little scuffle, and then everything. That movie was awesome. Yeah. That was a great movie.
I think for us ladies, it was the beach scene when they played volleyball.
Yeah, the beach scene. That was my favorite. The beach scene.
All right, well, that's it for today. We'll talk next time.
All right, thanks, Meg. Bye, everybody.
Bye.